Welcome to Smart Stock Watch, your go-to channel for in-depth financial analysis. Today is December 19th, 2024, and we're diving into FuelCell Energy's latest earnings report for the fourth quarter and full fiscal year 2024. Joining us is John, our senior analyst from Smart Stock Watch. John, thanks for being here.
Thank you for having me. FuelCell Energy has been making waves in the clean energy sector, and their latest earnings report provides a lot of insights into their current performance and future prospects.
Revenue and profitability overview. Let's start with the top line. FuelCell Energy reported a revenue of $49.3 million for the fourth quarter, which is a significant 120% increase year over year. However, they also reported a gross loss of $10.9 million. John, can you break down these numbers for us?
Absolutely. The revenue growth is primarily driven by module sales to Gyeonggi Green Energy in South Korea, which contributed significantly to the top line. Despite this, the gross loss widened due to increased costs associated with these sales and higher generation costs, including a derivative loss of $1.8 million.
And what about the net loss per share?
The net loss per share was 2.21, slightly worse than the 2.07 reported in the same quarter last year. This reflects the higher net loss, although it was somewhat offset by an increase in the number of shares outstanding.
Operational efficiencies and future outlook. FuelCell Energy has also announced a restructuring plan. Can you tell us more about this and its expected impact?
Yes, the company is undergoing a global restructuring to reduce operating costs by approximately 15% in fiscal year 2025. This involves realigning resources towards core technologies like distributed power generation and grid resiliency. The restructuring includes a workforce reduction and decreased spending on product development.
How does this align with their future outlook?
The restructuring is part of their strategy to focus on top-line revenue growth and future profitability. They aim to capitalize on the growing demand for clean baseload distributed power generation, which they believe is crucial for addressing power shortages and grid resiliency issues.
CFO Insights. Let's discuss the insights from the company's leadership. What did CEO Jason Few and CFO Michael Bishop have to say?
CEO Jason Few highlighted the strong global demand for energy, driven by sectors like data centers and AI. He emphasized the company's focus on distributed power generation as a key growth area. CFO Michael Bishop expressed confidence in the company's financial position, noting over $300 million in cash and short-term investments, which supports their growth initiatives.
It sounds like they are optimistic about the future, despite the current challenges.
Indeed, they are positioning themselves to navigate the market effectively and are optimistic about their platform's ability to meet critical energy needs.
EPS forecast and analyst expectations. John, let's talk about the earnings per share. Analysts had forecasted an EPS of $1.64, but the actual EPS came in at $2.21. What does this mean for FuelCell Energy?
This represents a miss of 0.57 against the forecast. The larger-than-expected loss per share indicates that the company is still facing significant challenges in achieving profitability despite the revenue growth. This miss could impact investor sentiment and the stock's performance in the short term.
What factors contributed to this miss?
The miss can be attributed to the increased costs associated with their revenue growth and the ongoing restructuring efforts, which have yet to yield the expected cost savings.
Key takeaways. To wrap up, FuelCell Energy has shown impressive revenue growth but continues to face profitability challenges. Their restructuring plan aims to address these issues by focusing on core technologies and reducing costs. John, any final thoughts on their investment prospects?
FuelCell Energy is in a transitional phase. While the revenue growth is promising, the path to profitability remains challenging. Investors should watch how effectively the company implements its restructuring plan and navigates the evolving energy market.
Thank you, John, for your insights. And thank you to our viewers for tuning in. If you found this analysis helpful, please like, share, and subscribe to Smart Stock Watch. We'd love to hear your thoughts on FuelCell Energy's performance in the comments below.